Hello everybody, my name is Mark and welcome to another one of my investing videos. In this video I am going to show you how to set up an option collar strategy with NVDA, nice little tech stock, and I've decided I have to use PowerPoint. It's going to be a lot easier for me to put in my disclaimers at the end of the video so you know that I am not a registered financial advisor and you are responsible for all your own decisions, and this video is for educational purposes only. So without further ado, let's get started. I picked NVIDIA because it has a wonderful growth curve. You can see this is a 5-year chart back in 2016. Today is July 3rd, 2017, so this would be about a year and a half ago. NVIDIA was down to a $25, maybe $30 stock, and now as of today it's well over $150. I believe the closing price was $166 a share, so they have a wonderful growth curve, and that's exactly the kind of stocks that you want to buy. Okay, so NVIDIA is a tech company. They focus on PC graphics and also artificial intelligence. Very interesting business model, I think. So good company, good stock to pick. And so I'll show you here, right here, how to set up an option collar strategy. So first thing you want to do is you want to make sure that it has good liquid options and that it has long-term options. So you click on this option chain and this will come up, and here you see all the different expirations, and there at the bottom you see it indeed does have long-term options, 533 days to expiration. That's all the way out January 18, 2019. That's about a year and a half away, so well passes that test. And here are the different options, and you see these are the 533-day options, January 18, 2019, and indeed it does have good numbers. You see it's in the thousands, and just for your information, OPINT stands for option interest. That means the number of contracts that are out there already written, waiting to be bought and sold. So plenty of liquidity in this market. So good stock, and it does pass the option collar strategy test. So you can invest in this stock and set up an option collar. So the first thing you do is you buy 100 shares of this stock, or if you have more money you get 200 shares or 300 shares, but let's say you get 100 shares, you click to buy, you put in your order, and there you go. It will cost you $16,660, right? So you place the order and bammo, you now own 100 shares of NVIDIA. And then the next thing you want to do is you want to buy put option. Okay, and so clicking on the long term here, I'm going to choose the $155 put option, and you see the bid is 23, the ask is 25.05. that's times 100 shares, so that's $2,300. so you'll probably get a price right somewhere in the middle. So you click on that and then you put in your price. I put in the middle price, 24, and then you put in your order, buy to open, one contract, $24 times 100. So you click the review order button, and there you go. It's going to cost you $2,400, so you would add that to the $16,600, so you would need about $19,000 to do this strategy. And this is your $155 put option, which means that this put option is going to give you the right to sell out your 100 shares of NVIDIA, which you already bought, and you already own those shares. And so if the market crash lands and let's say NVIDIA goes bankrupt, which I don't believe that's going to happen anytime soon, but let's say it does, you can sell your 100 shares at $155 a share. So great way to protect your money. Buy a put option, click the place order button, and now you own 100 shares of NVIDIA and you own that one put option. So the next thing you want to do is you want to sell a call option, because that's going to pay for your put option. Okay, so I'm going to click on the short-term call option. So one of the keys of this strategy is you buy long-term puts, you sell short-term calls. Okay, and the reason is because you make money on time decay. So I'm clicking these ones right here. I got highlighted 78 days out, October 20th, 2017, and this comes up, and the key is you want to pick call option that is going to pay for your put option. So if we go here, back here to the price of NVIDIA, you see that its last trade was $166.55. We spent $2,400 on that $155 put option. So you add that to this price, $2,400 plus $166, and you would get about $190. So those are the call options that you want to be selling. Okay, so you see here I don't have the $190 call options listed, so we have to go back to the option chain and pull those up. So you had to go here, you click on the range, and then you click on that out of the money up there. I got it highlighted in blue, and then you re-click on that 78-day option chain right there, and this comes up, and it's going to look like this. And there's your $190 call option. You see the bid is 500, the ask is 520, so we'll say 510. And so you click on that, and this ticket comes up. You put in all the information. This is your call options, got all the info right there. $190 call, 2017 October 20th, 72 days out. And then you put in your order. You would put in your sell to open, one contract. You put in the price 510, split it right down the middle. You click the review order button, and there you go. You would get $510, and that gets instantly credited to your account, and that goes towards paying the cost of your put options. Remember, the option caller strategy is for you to buy it. It's not for a hotshot day trader that's going to make millions of dollars or double their money or whatever. It's for the long-term investor like me that wants to buy stocks like NVDA or whatever stock you can afford, and you want to go to sleep every night knowing that you're not going to lose your money. So this is how you do it, and you get that $510 to help pay for that. You click the place order button, and then bammo, now you have a full option caller invested. So the tail of the tape is, number one, you bought 100 shares of NVIDIA at $16,655. Number two, you bought one January 2019 put option, $155, so that you can sell your 100 shares at $155. You spent $2,400, and then finally you sold one call option, 2017 October, 72 days out, and that's for $190 at $510. Now that call option, you are giving somebody else the right to buy those 100 shares of NVIDIA from you. So if NVIDIA goes up, and there I got listed, first of all, I guess I should mention that you do have the right to sell those 100 shares of NVIDIA anytime you want at $155, which you wouldn't do as long as NVIDIA is higher than $155. But if NVIDIA went down to $130 or $140, you might want to do that. Or you might just sell your put option. The value of your put option will go up, and then buy a cheaper put option. The second one down there, you see that if NVIDIA rises to $190 in the next 72 days, you will make enough profit to pay for your put option. Why? Because you spent $2,400 and you bought the 100 shares at $16,655, right? So if NVIDIA went up to $190, you would make $2,400. And just to give you an idea just how much money you would make, here's a list of the $120 put option, and you see that $120 put option is still worth $1,000. So if that is worth $1,000, then I can guarantee you that if NVIDIA went up to $190, yes, this $155 would go down a little bit, but it would still be worth at least $1,000, if not more. So you would make very good money if the price of NVIDIA went up. And since I like NVIDIA, I think it is going to keep going up, then I think this would be a great thing to do. Buy 100 shares of NVIDIA, buy that one put option, and then sell the call option, and then that call option slowly but surely will pay for that put option. So very safe strategy, very safe way of buying stocks so that you can invest your money. You can go sleep at night knowing that your money is safe. So thank you for watching, and now my wonderful disclaimer.